Meta Platforms reported fiscal 2022 third quarter earnings results that were absolutely dismal. To say that investors were disappointed in these results would be an understatement. The stock was down 24% on the day following the earnings release. So let's take a look into what had investors so upset about Meta Platforms' third quarter earnings results. Overall revenue decreased by 4% to 27.7 billion in the third quarter. This is now a few consecutive quarters in which Meta Platforms revenue has decreased year over year. This follows a period in which over the last decade, excluding these recent events, Meta Platforms was growing revenue at a compound annual growth rate of 40%. So this is a dramatic turnaround from the robust revenue growth the company was experiencing. Earnings per share of $1.64 was down 49% from the same quarter last year. Dismal reports top and bottom line, and you can start to see why Meta Platforms stock investors were so disappointed in the current quarter. Family daily active people, so this is the daily active users across its Facebook, Instagram, WhatsApp, and all of its platforms. 2.9 billion, an increase of 4% year over year. So on the plus side, Meta Platforms is still attracting users to its platform, and you can say that nearly half of the planet, 3 billion people, are users, daily active users of one of Meta Platforms apps. So that's good news there. And of course, Meta Platforms apps are free to use, and it generates revenue by selling advertising to marketers to gain access to these 3 billion users. And the average price per ad in the most recent quarter was down by 18% from the same quarter last year, while the number of ads delivered increased by 17%. So Meta Platforms is showing users more ads, but it's receiving a lower price per ad. Now, I will note here that I looked at Alphabet's most recent quarter's earnings results, and Alphabet as well experienced a decrease in the price per advertisement, but their decrease over at Alphabet was only 5% year over year, whereas Meta Platforms average price per ad was down 18% year over year. So more than three times the decrease from Alphabet. And the difference here, the delta in the decrease of change for Meta Platforms, is because Meta Platforms is more significantly negatively impacted by Apple's privacy policy changes that impacted advertiser demand. Now, if you're not aware, in 2021, Apple changed its privacy policy where it gave consumers the right to not allow their activity to be tracked on the iPhone and other devices. And so that's made it more difficult for Meta Platforms to track user activity and then to sell targeted advertising. And that's what marketers like. They like to sell targeted advertising because it's more efficient. And so these changes are the reason why Meta Platforms' average price per ad is falling so significantly. And there is no short-term fix to this. Meta Platforms has known about these changes since, I would say, 2020, and they've been working on countering these changes, and that's going to take time, management says, and it may never come to the point where it's able to sell the degree of targeted advertising as it was able to do before these privacy policy changes were implemented. And so as Meta Platforms investors, stock investors, are realizing the negative impacts from this, that's causing the stock price to fall significantly. And it's down tremendously in 2022 overall, and it's down over 24% since this latest earnings was released. And to make matters worse, Facebook's Reality Labs segment losses totaled 9.4 billion in the 9 months so far in 2022. Meta Platforms, of course, this is the reason why they changed their name to Meta Platforms, because they're investing aggressively to turn themselves into a metaverse business. while Mark Zuckerberg said that the payoffs from these investments will largely materialize sometime around 2030. So that's a long time that you're asking stock investors to wait for, to be patient all the way until 2030, while you're spending up more than 10 billion in the year on these plans. And so that kind of rubbed investors the wrong way, and another reason why the stock was down. And then management even said that the losses in this segment are going to be even higher next year. So not only are they going to be higher than 10 billion this year, they're going to be even more next year. So it's not like investors of today can look forward to smaller losses next year. It's hard to find something in this most recent quarter's report for investors in Meta Platforms stock to be excited about. To fund all of this growth, all of these investments, Meta Platforms entered the debt market for the first time ever and borrowed 10 billion or 9.9 billion dollars in long-term debt. And it used, of course, some of that money to invest in these metaverse plans. Some of it still has on the balance sheet. Some of it used to buy back its stock, where it repurchased $7 billion in its stock, and it authorized another 18 billion in stock repurchases. So even though Meta Platforms stock investors are not enthusiastic, they've been selling aggressively, Meta Platforms management is thinking the opposite. They think their stock is undervalued right now, and they're buying back their stock at an accelerating rate. So it's a tale of two stories here, where stock market investors are saying, Meta Platforms, your decisions are not good. We don't like that you're investing so aggressively in the metaverse. We want you to slow down those investments, focus on some of your near-term profits, while Meta Platforms management is saying, hey, stock market investors, you're short-sighted. You're not looking at the long-term benefits of these investments. According to McKinsey, which is a widely respected consulting firm, they think the metaverse could generate 5 trillion in revenue by 2030. And so for us to be investing in becoming a metaverse business right now before anyone else is, we're gaining the upper hand in this massive industry. And so you should be excited about that. You should be on board with this investment. But there is a disconnect between stock market investors and Meta Platforms management, and the stock is down 24% in following these earnings release. In my opinion, I think that the stock market investors are overreacting to the near-term negative aspects of Meta Platforms results. I think Meta Platforms stock is a buy at these levels, trading at less than $100 per share, with all of the investments already made in the metaverse and the cash available to make continued investments. Now, don't forget, the company still boasts nearly half of the planet as a daily active user. Marketers cannot sidestep them. They're way too powerful in terms of their depth and breadth in user and population access. And so if marketers want to advertise, they need to go with Meta Platforms. They need to use their services. And yes, maybe the average price per ad will experience headwinds in the near term, and user engagement will also experience headwinds in the near term as short form video takes popularity. However, in my opinion, investors are overreacting to these headwinds, and Meta Platforms stock could be a good buy at these prices. All right, so that's all I've got for Meta Platforms stock in this earnings update. Thank you for watching, and I will see you next time. I want to thank the Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for all investors of all skill sets and risk levels. So I'm proud to partner with the Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by more than 3 times. Go to fool.com/Parkev to get your 10 stock picks now.